Hey everybody, welcome to our educational video here on the Wolfsbane indicator, which is a new indicator put together by one of our master traders, Bilbo. And I'm just going to read through some brief information here before he gets into actually training you on how to use the indicator and what all these squiggly lines mean. So let me get down here and I'll start here. So the Alpha Trading Wolfsbane is a triple oscillator that has some teeth. The core of this oscillator is built upon volatility and statistical formulas. Alpha 1 uses the coefficient of variation formula and is a standardized measure of the dispersion of a probability distribution. Variance is the spread of data around the mean. A correlation coefficient is built in as well to give you the probable direction of the spread of data and an incoming move. Alpha 2 uses the z-score formula and describes a values relationship to the mean of a group of values. Z-score is measured in terms of standard deviations from the mean. There are statistical outliers built into the z-score that are telling you that the population has a heavy-tailed distribution. Lastly, there are probability confidence intervals of 90, 95%, and 99% built in on both sides of the mean, which you'll see on the indicator with the lines on the top and the bottom. Alpha 3 uses the momentum of log returns and is the basis of the Wolfsbane, showing you the divergence between price action and log returns. The coefficient of determination, or R2, is built in as well, showing you the increasing or decreasing correlation between log returns and price action. Every part of this triple oscillator is unique. There is nothing else like it in existence. Wolfsbane can be used on any time frame. Use this oscillator in confluence with other alpha trading indicators. Do not trade this alone. As far as the setting inputs go, you'll see a picture pop up for that. The Alpha 1, the sample size equals a look back for Alpha 1. The sample size correlation equals a look back of correlation for Alpha 1. Alpha 2, sample size equals a look back for Alpha 2. Alpha 3, sample size equals a look back for Alpha 3. The sample size correlation equals look back of correlation for Alpha 3. Alpha 3 div. Show div equals toggle on and toggle off divergence for Alpha 3. The style settings are for changing colors and the style of Alpha 1, Alpha 2, Alpha 3, the confidence intervals, and divergence. So we'll go now to Bilbo as he will train us on how to use this great new indicator from Alpha Trading.
But I will, one at a time, break them down and tell you what each part of this indicator is and how it's all operating together. Because, you know, if you're looking at this indicator for the first time, it looks pretty complicated when it's only going to be complicated if you make it complicated, right? There's only a couple things you can actually do. First, you got to know what all the parts are, and then how all the parts work together. And then it's easy going. It really is. It's easy going because when you understand how to use it, it's pretty damn easy to get into positions. But it's just like any other type of volatility trading. I'm not going to make an entry on a 4-hour, right? But if you see a 4-hour setting up, which I usually don't because I'm making my entries on a 15-minute. But if you're trading on a 4-hour or a daily, right? If you're a swing trader or whatever, drop down, get your entries on a lower time frame, like 15 minute. And so there's 3 part of this 3-part oscillator. Alpha 1, Alpha 2, and Alpha 3. Now, Alpha 1 works off of the statistical formula called coefficient of variation, right? So it's literally variance is what it is, okay? And variance is the spread of data around the mean. And what is the spread of data around the mean? It's volatility. The standard deviation of returns is volatility. Okay, that's why putting these 3 parts together, you'll see here soon why this is so powerful. So the blue line up here, and we're going to have an update soon to show statistical outliers in the coefficient of variation. We haven't put it in yet. So when you start to have a rise in the variance, right? The counterpart with this variance, here is a correlation coefficient, right? The green and red line down here is the correlation coefficient that goes along with the variance line. And because variance will never have a negative value, it only goes to zero. Variance only rises. And the thing, people have been using variance for a long time to trade options and stuff, right? They want to know when there is a spread of data, right? When the returns are moving away from the mean. But until recently, nobody figured out that if you correlate that variance to price action, it will give you direction of the move. It will tell you which way the price is going to go, right? There's people out there that say that this is just like voodoo and it doesn't work. Well, don't let them kid you. They don't know what they're talking about. They don't trade, and this is something that we've worked on for a long time, and it does work 100%. You can see right here, when you get a rise in variance right here, look at the correlation. Look at the correlation, right? The correlation is breaking down to the downside at the same time. Variance up, correlation down. Bam. And you can see, but even before that, we get a big down candle here, right? You get a big down candle here. Now, why did that price pull back up hard? That's why this wouldn't have been an entry, because if you're just working off the 4 hour, you're going to be looking at the variance is heading down and the correlation is negatively correlated. That's why you see this big bear wick, because they tried to push the price down, but because it was when variance was heading down and it was negatively correlated, that's telling you that price action will walk up. So that's why you see that the down move didn't even start yet. This is when the down move really started, when the variance literally went from heading down to going back up. And then you really had to slam down in the correlation. Okay, that's when you got this big 4 hour candle right here, which was about $3,500 4 hour candle. I mean, come on. You don't have to get what? I mean, you get 30% of that move, you're good to go. This is where patience pays off. Hell, you could be patient, right? You wait for this candle to close. Look when the next candle opens up. I mean, hell, this variance is already popping. The correlation's already, you're in. You're in on that move, especially when you see how the rest of these indicators all work together. So, alpha 2, right? Alpha 2 is the area that you see here, the pink and white area. And that is a z-score, okay? This is a root mean square z-score. And the white part is when there's a statistical outlier. And so what is a statistical outlier, right? A statistical outlier is telling you when there's a fat tail event going on, right? When this is definitely moving outside like second and third standard deviation. That's when you start to have a fat tail event. So anytime you see the area white here, there is a fat tail event in process. And it can be to the upside and to the downside and never lose it. That's how powerful this can be, this indicator. And you can also get divergence read off of the z-score, right? So now let's put the z-score in with the coefficient of variation. So right when the variance goes to the north, the correlation goes to the south, telling you that it's negatively correlated rise of variance, which means price action is coming down. It's a fact. I'm not even going to argue with it to people. They can say, oh, well, you can't guarantee that. I'm like, yeah, I can. This is all I've done is study this for years now. And when you have negatively correlated volatility, price action goes down, right? But now, when I say that, a volatility expansion, right? A volatility expansion negatively correlated, price action will go down. But when you have volatility contracting with negative correlation, price action is going to start walking up. So that's where people get confused with volatility. That's why you really need to study it. But you can see at the same time, look at Z-score. Z-score was heading up a little bit. Another reason why this candle pulled back up like that. But then right when the variance takes off and it's negatively correlated, Z-score starts to head to the downside at the same time, right? The same time. So there you've got coefficient of variation and Z-score telling you that that's an entry. And if I put here's what I'll do too. Just so when I flip to a lower time frame, right where that's showing 4 hours. Okay, so that is alpha 2. That's a Z-score. And that's what I'm saying. This is simple. This is a simple indicator. So when I'm describing it, I'm not going to try to make it complicated because there's nothing complicated about this. It just looks complicated. Once you understand what each line is and what it's showing you and what statistical formula you're looking at, you're good to go. Then it's all up to you to just study. Low time frames. Throw this thing on a minute and just watch it populate, right? Use the replay function. Just watch this thing create its own action, and it'll blow your mind. Okay, so alpha 3. Alpha 3 is a returns oscillator. Okay, that's what this white line is. This is the returns oscillator part of it. Okay, and with a built-in divergence function, because everybody knows alpha trading uses divergence between price action and returns, right? As a first, right? The divergence on Z-score for me always comes second. So if I see divergence on the returns, and then at the same time I see divergence on the Z-score as well, you can see, look, the green line right here, right? Got a higher low on the returns oscillator, lower low on this 4-hour candle, and the Z-score is printing the bull div as well, plus hitting the 95% confidence interval. No brainer what was getting ready to happen on this 4-hour move. And that divergence literally played out. Let's see. Back up 4,000, right? So we literally dropped $3,500 4-hour candle. And then from here, we raise. God, that wrong? It looks like way more. Let's see, just with the candle. 4-3. Yeah, 4,000. 16. Oh, that's why, because that was only $2,000. I thought that was 500. That makes more sense. Yeah, so it's about a double move to the upside. You got $2,000 4-hour candle to the downside, and the move overall though went down about 3,500. That's what I was looking at daily. That was the daily candle I was looking at. Bear with me. So all together, you get about a $3,500 move to the downside. But then, because of this bull div that got printed, you get a $4,000 move to the upside, all the way up to this candle to about where the top was. We had one more top, right? But up to this green 4-hour candle, that's when the bear div started printing. We had the first print here. Oops. Let's see. So that would have been this high and this high. And then we get a 4-hour candle that pulled back a little bit because there was some bear div. Then we get up to this next high up here, another stab of bear div on the returns oscillator prints, right? It hasn't been on the Z-score yet. So I'm not worried about a big down move happening. This is where the Z-score peaks out at 99% confidence interval, okay? And you can see, look at all the bear div that's being printed, right? Actually one stab, boom to boom. But then we get this high right here, still a lower high on the Z-score. So you've got a lot of bear div on the Z-score. This high up here at the 90% confidence interval, from this point right here on the returns oscillator all the way over to here, there's bear div. And now we're seeing it play out over multiple candles. How low will it go? That's when I'm going to go over here and I'm going to be like, okay, What is, let's see, coefficient of variation has still got room to drop on it. Yeah, it's got room to drop. So this variance can still go lower. It's positively correlated. So when you've got variance coming down, that's it's sloping down and it's positively correlated, you're going to see price action walk down, right? So, and considering how high this correlation is, it would not shock me at all in this 4 hour to see if we do have a big volatility move come in and this variance start to go back up to the upside, you'll see a break in correlation back to negatively correlated, heading down to the downside. The returns oscillator is already heading down, right? But the counterpart that goes along with the returns oscillator is this histogram, this green and red histogram you see right here, right? That is the coefficient determination between that the returns oscillator and price action. And is what the R squared is telling you. That's what the coefficient determination is, the R squared. It's telling you whether or not that correlation is increasing or decreasing. Right now, it's decreasing, right? Right now, it's decreasing with these red candles. So you can see right about here, the returns oscillator turns down. But look, it's turning down, telling you it's actually positively correlated, right? So it's telling you that the move to the downside, that you could trust that. And you can see on that 4 hour candle, it pulled back, right? But now it's telling you don't get in the short yet. So it wouldn't surprise me at all if we close this 4 hour candle, if we're going to get more downside action, that you'll see a blue histogram pop up. But you got to remember, the higher time frame you go, it takes longer for this stuff to populate. That's why you want to be able to drop down through the time frames. If you're looking to get into short in your swing trade in the 4 hour, you want to drop down in the lower time frames, like first a 90 minute, then a 45, then a 15, and kind of see what that Wolfsbane is telling you, right? Because you don't want to get in, and if you do get in a short in a bull market, take your profit fast and often. Just take your profit. That's what you do as a volatility trader. But right now, this move is literally telling you, don't get in the short right now. You can see it when you drop down on the 15 minute. There hasn't been, even though the 4 hour is telling you that the return, even though the returns oscillator is down, the variance is heading down, positively correlated, right? Even the Z-score is heading down. So you got the three parts telling you, hey, this is a down move happening, but it's not accelerating, is it? Right? I mean, it's not accelerating. And that 4 hour candle is from about right here. I mean, so we're only talking about $500 drop altogether. Yeah, about a $500 drop altogether. I mean, that's not really worth its weight in anything, in my opinion, unless you're scalping these low time frames. But if you're scalping these low time frames, you're out right there. If you're getting in the move up here, like a little bit before the beginning of that last 4 hour candle, previous to this one, you're out when it's bouncing off of this 68.3 range. So that's where it becomes hard for a volatility trader to realize what he's dealing. You're dealing with a powder keg. This thing can switch at any time. So you always want to make sure you take profit. And you can use this indicator to take profit. You really can. I mean, another thing like returns oscillator is good at, even though it turned down right here, it's like, would that have been a good place to take profit? Yeah, it would have been a great place to take profit. 100%. 100% it would have been a good place to take profit. Same with right up here, where the returns oscillator comes up and we get a switch right here. Do you get all this move? No. But on lower time frames, you could have got back in this. You could have got back in on this 4 hour move all day long. And that's what I like to do. People that know me as well, we'll get to that later. I'll finish up on this later. But those are the three parts of the Wolfsbane. I mean, you literally have alpha 1 with coefficient of variation, right? And the blue line is the variance. The red and green line is the correlation coefficient of that. It's going to tell you when the variance moves to the top side, what direction price action is going to be going. And so is what I do with this indicator mainly when I'm looking for a signal from it I'm waiting for the variance to start to head up. I'm looking at the correlation, and I'm seeing if the z-score slope is supporting that move. So that's a no-brainer short right there. Especially, let's drop down. I'll show you some moves on the 15-minute. Boom, it's perfect right there. So right here, variance takes off, right? This is on a 15-minute. Takes off, breaking correlation right here. So it's red, negatively correlated. Z-score was heading up. Boop, turns around right at the same time, starts heading back down to the downside. And you, right when the return starts to flip, you're to the downside, you're getting a blue histogram, right? You're getting a blue histogram. You can see how fast it changes though. Then you get down here at the bottom, that 15-minute move's already over. And now the down move's saying, don't take it. Well, of course not. This was telling you to get in. That's telling you great time to take profit. And that 15-minute candle right there, yeah, about $500, almost $500 15-minute candle. So this is how this works on lower time frames. And you can jump all the way down onto the 5-minute. Right? You can use this on a 5-minute all day long to get into positions. Because you can see, this is what's great right here. Look where this little 5-minute up move starts. A variance takes off, right? You get 2 little 5-minute up moves. Look, the variance continues to go. You have a break in correlation though to the downside. And then, so if you're doing quick scalps, this is where this is going to come in when we get our algo built. And so when we get an algo built, you could possibly, you get in there, then the algo is going to recognize what's going on and going to flip you short. Going to get you right into the down move. It's a powerful indicator. Please study this. Please study this. There's going to be a lot of educational material in Discord for this. Right? There's not a lot. Description on TradingView is just basic. It just tells you what the 3 parts are. I wanted to make sure everybody knew what the 3 parts were, so you know what you're looking at. And if you just put in the time and work with the indicator, you will start to see it. And like I said, you still have to have patience, right? You still have to have patience, but you don't have to be in 100% on the move 100%, right? You don't, unless you're really good at what you do. To be able to scalp with an indicator like this, you should already be a profitable scalper. That's what I try to tell people. You know, they'll start to use something like this and they're like, well, this, that, or the other. I can't make any money using this. Everything's happening so fast. It's like, well, were you a successful scalper before? And they're like, well, not really. And it's like, well, you have to become a good scalper. You got to know how to read price action, right? To begin with. You got to know how to read all these individual indicators first before you use them together. And like MJ said at the beginning, if you want to practice with this indicator, just with the different parts, turn a couple off. Just use one. Just use the coefficient of variation and see what happens when you get a variance rise. And then first it's positively correlated, then it goes right into negative correlation. And look how the R squared. Look how the R squared is building with the returns oscillator. It's telling you to get in this long and this short. It continues to build. And right when you have the break in correlation for the coefficient of, variation, the returns oscillator turns down. So that's why just learn how to read this. It will pay off. The dividends are going to be incredible. Just continue to study and realize that when you get these little prints of div, pay attention to them because they play out. They play out big time. Look, this whole little 5-minute up move was because you had bull div building the whole time. And finally, you got that last stab and boop. It's not a huge pop, right? It's not a huge pop at all. What, 130? You're talking about $140 though, right? And if scalping is what you do and you're a 5-minute scalper, that's a hell of a move. Especially if you're scalping with a couple Bitcoin. In literally under 10 minutes, you made, you made like $250 in under 10 minutes. And then if you were quick enough to realize what was going on, you might not get in this whole move right here, but you're in a lot of it. And you could have stayed in for 15 minutes. That was that 15-minute candle, right? That was almost $500, right? Yep. Almost a $500 15-minute candle. So that's how this all works together. And I know at first it's going to look a little confusing. We've had some people are getting on it really quick and understanding what they're looking at. Others, it's going to take a little longer, which, hey, everybody learns at their pace, 100%. So let's watch this move populate here. I guarantee it's already shown up. Yep. So look at the variance right here. Variance just we got a little lull in it, and then right about there it starts sloping up, and right here you have the breaking correlation. The move accelerates, or at least the downside on the returns oscillator. Right about here you start getting blue histograms, right, through that move. And now you can see the returns was starting to turn up, and it's giving you that the correlation's starting to go the other way, starting to decrease now, which is telling you don't trust the returns oscillator. Look at the variance is still rising. It's still negatively correlated. So this move on the 1 minute could continue big time. Is there any div building? There's a little bit of bull div on the returns oscillator, but when it's telling you not to get in that position, you should definitely listen. But it could play out. Look at the variance on that 1 minute candle change. It did flip over. But that's the thing. This variance starts to come down right here, and it stays negatively correlated. The price action could walk up. But if this variance were to start coming down and that go positively correlated, you'll see price action walk down. Right? Now, right now, if variance starts to still head back up, right? Because this can go high. Right? You saw that on that 4 hour. We had that big freaking variance extension. So if it starts to head back up and it stays negatively correlated, the price could accelerate. Not just walk, but accelerate like what you're seeing right now. This is where if you want to learn how to use this indicator or just watch it, if you have a premium account, go to a 30-second chart and watch this thing in action. It'll blow your mind. It's literally like it's live. You will see it populate in real time. See, like right now, it's heading. It started variance, started coming down, but it's going positively correlated. So if that continues, you'll see this 1 minute continue to walk down. That's how variance, which is volatility, works. When you're having a contraction, right, back down, and it's positively correlated, price action will walk down. If variance is coming down and it's negatively correlated, price action will walk up. So we'll see what happens here. Let's see what in this next flip of this 1 minute candle. Because the variance is going to be coming down and that price action is going to start walking up. You'll see it go negative just like it just did. That's what it's fun to watch this on low time frames. See how this actually, oh, that does work. Yeah, of course it works. Of course it works. Or we wouldn't even put it in print, right? That volatility cheat sheet's been out for quite some time now. Because it's telling you what's going on, 100%. And on a 1 minute, you'll see it in real time. Now it's heading down, positively correlated. So you're probably going to see this next 1 minute candle start walking down again. Very interesting. But that in a nutshell is the Wolfsbane indicator. Very powerful when you learn how to read it. Like I said, learn on low time frames. I'm not saying try to get in trades, but when you watch how all these parts work together, it'll astound you. It'll astound you. And you can see though, do I think this 1 minute move's getting close to being over? I do, because you did get a print here. You did the returns oscillator did move to the upside. The Z-score is back up. It's in between the 90 and 95%. It almost got up inside the 90% confidence interval. There's bull div on both. Now you can always print another stab of div though. That's where you need to be careful. And what I really count on is the variance. The variance will always tell you what's going on, right? So it is heading back down, but it happens so fast on the 1 minute. Hell, this variance could take off again. Right now, it's telling you these last couple candles are walking down because it's positively correlated. Variance is coming back down. But boom, all this variance has to do is change and start heading back up, positively correlated. You'll see that dip play out. Wham! So that's how you work it all together. Powerful, powerful, powerful. Go. Let's see. That's why you got to study it, say, Ron. It's not hard after you realize watching the price action and the tendencies of what is going on. But plus, it's like, just like all the other alpha trading indicators, you're not just using this, right? It would behoove you, like up on price action, to have the VRE, right? Let's see where we're at right now. Look where we're at right now. The top of the weekly range. There's a high probability this could bounce from here, and that div on the 1 minute could play out, right? That's why you need to know where price action is when it comes to distribution levels and volatility price action levels. Just like all the other alpha trading indicators, you don't use just one. You got it. It's easier. You could use this. This is advanced though. To be able to use this indicator just to trade alone and know where to take profit, it's going to take you a while. It really is. It's going to take you for a while. When would I have? Let's see. I mean, I would still, if I got in this 1 minute short back here, I'd still be in it, to be honest. Now that div is printed. But the thing is that the variance was taken off. It was negatively correlated, running it down. But then it went positively correlated coming down, telling me that price was coming, still coming, right? But it did. It print. So you got bull div, second stab of bull div. Let's see, way back here. Yeah. Although it is a little lower. No. But yeah, so that is where, when I saw that on the 1 minute print that bull div, the variance turned back up right here, positively correlated, right? I would have been out. I would have been out somewhere. I probably would have been out here, to be honest, as soon as the variance stopped rising. And that's what you do, is if you're scalping the 1 minute. But yeah, if you can't trade the 15 minute and be profitable, don't even try to go to the 1 minute or the 5 minute. Let's see. What is Andy saying? Displayed in error. Yeah, the grain z-score is the z-score is having a statistical outlier. Oh, I see. Yeah, spell check. Displayed in area. Yes, thank you, sir. Yeah, this is a powerful indicator for sure. Look how quick everything happens, though, right? The correlation heads back to the downside, negatively correlated. Same time the variance starts dropping, price walking back up. All right, 1 minute. If you're trading a 1 minute with Bitcoin, you're taking like $50 scalps, boom, $100 scalps, one after another, like that. You're not sitting in position. 15. Let's see what this looks like on the 15 minute now. Yeah, from what I've seen. Yeah, because right when this 15-minute down move started, you can see variance starts to head down, right? Positively correlated. So we get these 3 15-minute candles coming down. But I'm telling you right now, if this stays positively correlated, it's trying to flip over. If this stays positively correlated and variance continues to go back up, you're going to see this price action bouncing. And where are we at? Once again, we're bouncing right off of the top of the weekly range. I mean, look at the wick, bounced right off of it. But now, if this variance continues to rise, and this goes in and this flips back down, negatively correlated, you're going to see this price drop more. And now I'm looking at the returns oscillator. The returns oscillator is telling you, trust this signal, right? Trust this signal. But it started building back here, right? Look where it started heading down. And it's in the correlation, the R squared between the returns and price is telling you that this down move is still good. But look at the returns oscillator in the 15. Look, it's starting to head back up. So when you're scalping That's why I usually make trades on the 15-minute, and I use the 5-minute to get out, right? I use the 5-minute to get out, along with the VRE, right? This is very powerful to take profit. Take profit. And if the indicator is telling you, hey, I think this correlation is breaking the other way, I think this moves over. This could be a long now. And you're like, well, where am I? Oh, well, we're bouncing right off the top of the weekly range. You're getting a lot of confluence that this could go back up. But you're like, is it worth my capital? You know, what time frame are you actually trading? Because then you got the 68.3 top side of the daily right here. So we're talking a tight range between 47,850 and 48.1, right? So you're talking $250 range, which if you're scalping the 1 minute all day, right? Those are good little scalps. If you're trading a 15-minute chart, yeah. Plus, it's like we got a couple hours till the close. Yeah, a lot could happen. Like I said, I wouldn't be a bit surprised, but we're talking tomorrow, 3 p.m. Pacific Standard Time. Literally 24 hours from right now is when those institutional futures open back up. But it will not shock me. And what the bears are trying to do right now is they're trying to close this price action below the new daily range, right? I said around 48.3-ish, right in this area right here. So the bears are going to try to keep this in the 68.3% range. If they can, they want to close this price action down underneath the top of this weekly range. And then you could probably see the opening tomorrow. You'll see the downside of the 68.3 probably on the daily get tested. It could just bounce in between there until those institutional futures open up. We did get a little bit of a trend today, right? Not a huge one, but decent. What was the whole total move? Well, let's see. Yeah, almost $2,000. So not bad. But you got to take in the whole move, right? It went up a couple grand, but then it dropped a grand. So, I mean, we've literally almost had about $3,000 in it, which isn't bad, especially for a weekend. Okay. But yeah, that's going to end it on the old Wolfsbane. It is. Like I said, ask any questions about it too. But it's a simple indicator to read. You just got to know what the parts are and how they all work together, right? And how divergence builds on the returns oscillator in the Z-score. And when those moves are going to play out, which a lot of the time when those moves play out is when you start to get another rise in variance, right? When you get another rise in variance, and the correlation is going to tell you, it's usually going to match up perfectly with what's going on with the div that's being printed. I mean, you can see right here on the 15. Wouldn't be shocked off. This turns back up to the upside. It's already positively correlated. Bull div just printed, and it's on the Z-score and the returns oscillator. So let's see what happens. At the same time, on that new 15-minute candle, it's telling you that the correlation is increasing with the returns and price action. And what that's telling me is that if this little bit of bull div does play out, it's going to come up here and probably reject right here at the 68.3. Right? We're just going to be in this little $250 range here. It shakes out, especially to the end of the day. I mean, we could just sit here and just mess around right in this area. Because, let's see, this 4-hour candle open. I mean, because down here, that's a second standard deviation. Laplace distribution and normal distribution. Or it's the second standard deviation, normal distribution, 95.4% probability for Laplace distribution. So this could be the range till the end of the day. See what happens. It's not a bad range if you're scalping. 1. Yeah, about a $600 range. Not bad. The link to our Discord in the description. With that being said, see you guys.